Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Oana.
Okay.
And before you get started, I have a question.
Oh, my God.
Not related to what we're doing. You have no idea what I'm talking about.
What is the question?
Which is generally what happens. Okay, so I have a question for you. I was just sorting the mail, and the way I sort the mail is over the trash can. How many of you sort the mail the same way? That's my first question.
Yeah.
My second question is, when you get a real estate advertisement, what makes you stop before you throw it in the trash? You know, is it the picture on the front? Is it the message? You know, what makes you stop? This is just curiosity on my part. Like I said, I was just sorting the mail over the trash can, and I had that question, so I thought I would ask it of you guys. Please put that down in the comments. I apologize for the interruption of the video. Todd, take it away.
Yeah, that's a good question because I sort over the trash can, and all the real estate stuff goes in the trash.
That's right.
We get spammed because our neighborhood are high kind of homes, so there's agents farming the neighborhood doing that stuff. So anyway.
So we're just curious. We're not trying to farm you guys. Obviously, we don't know where you are or who you are.
Right.
But we're just curious how everybody else gets through all this.
Okay, so first of all, we are going to...
And my skirt sort of matches your jacket.
It kind of does. This is raw silk. What's that?
I don't know.
That's I think that's just polyester. Okay. This was custom made in Korea. It's even got my name.
This was store-bought at Dillard's.
It's hard to see, but my name is actually written in there in cursive.
You know why?
Why?
So when you go to camp, you can identify your jacket.
When I go to my camp, the summer camp. I got 3 weeks of summer camp. Okay, we are going to talk about this article that came out. Bank of America has grim news for home buyers. Mm-hmm. Prices will stay high and could go higher while inventory remains scarce. Oana,
yes.
Let's talk about why does Bank of America why do they have a dog in the fight? Why do they even care?
So, 2 reasons.
Okay.
1, so they can be relevant. Okay. And that cannot be overstated.
Okay.
It is very important that they keep their name out there and be relevant, right?
What's their economic? Do they have an economic incentive?
They do have an economic incentive. The economic incentive is really not that great because they don't do that many home loans. Let's face that. They do home loans, but not that many. But like I said, their number one reason for putting that out there is so they stay relevant.
Okay, just so you guys know, most loans are not actually done by banks.
No.
They're not. They're done by mortgage companies. Mortgage companies generally are using private money, and then they sell those securities on the secondary market, and they get securitized and bundled, and retirement funds and other people are the people actually behind the paper. So it's the idea that banks are usually lending to I want to buy a commercial building, but in general, like Wells Fargo, I think they even said they're not doing any more mortgage loans except for portfolio clients, basically. They're not. So if you just went to Wells Fargo, I want to get a loan, unless you have $5 million under management, they're like, hey, we're not dealing with you.
I think they're doing $1 million under management.
Oh, $1 million under management. Okay.
And that's not unusual. So Wells Fargo does that. A few of the other banks do that as well, because what they figure out is that they really can't compete with the Quicken Loans type loan companies out there, Loan Depot, all those things. They really can't compete with those things. So they don't even try to compete with them. They are competitive with those lenders when it comes to their portfolio clients because they do offer better rates than those companies tend to offer their portfolio clients. But unless you're a portfolio client, which generally means $1 million or more in assets with that institution, they say, you know what, good luck, go somewhere else.
Right. Okay. Here's the first quote for the article. U.S. housing market is stuck, and we are not convinced it will become unstuck until 2026 or later, according to economists at Bank of America. Talk about the stuck. We've been talking about this, but I have an interesting opinion on this, but I want to hear yours first. What is the stuck, and what's going to make it unstuck?
So the stuck is people with the under 4% mortgages who don't want to trade those mortgages for a higher interest rate. So they're saying, hey, I'm not going to put my house on the market to sell it and go buy another house with that money. So that's what we might stuck, which means that these people are not selling their homes in order to buy another home. It's not that they're not going out to buy another home. That's not the same thing. They are going out to buy another home, but they're not selling their 4% or less interest rate. And to answer the second part of your question, I was paying attention. The second part of your question was, what is going to get it unstuck? And unstuck is a really hard nut to crack. So first of all, some people will never get unstuck, right? Because they've got this, sub inflation interest rate. So if your interest rate is less than what the rate of inflation, it doesn't make any sense to pay that off or to extinguish that loan in any way. So those people, that they're not getting unstuck. And then who might get unstuck? Well, who might get unstuck are people with life events, but even people with life events are going to try to find a way to still keep those loans, still keep those homes. So there will be some that, of course, will not be able to do that because of whatever reason, and they do need to sell that house. So they will go ahead and sell that house and pocket lots of equity. Some of the things that you might see more out there of, and we haven't really talked about this before, but you might see more properties that are being sold subject to the loan. So there are different ways to do that, and that we have put out videos on AITDs and loan assumptions and that sort of thing. But that's kind of the genre that I'm really talking about, where the buyer takes over that loan and then pays the seller something else, or the seller carries a second, or some combination thereof. So those properties will transact in that way. So there are all kinds of things, but the bottom line is the people who have the sub 4% interest rates, very few will transact those homes. Most of the time they will keep them either as their residence or as an investment.
Here's a problem I see. Historically, let's take boomers and older Gen Xers, okay? Which I'm an older Gen Xer. You bought your first house in the 80s at 14%. And then 3 years later, you moved and you sold it and you bought a house at 12%. And then 4 years later, you sold that house, you bought another house at 10%. And then 5 or 6 years later, you got 8.5%. You thought that was the best deal in the world. 5 years later, at 6.5%. A decade later, you bought another house. It was 4%, and then you refied it 2.5%. Okay, and we'll just say you're in your 60s. Okay, so that's all the younger boomers. If you're 60, your life expectancy median is 24 more years. I mean, if you made it to 60 on average, half the people are going to make it to 84, and half the people, will live beyond, and half the people die sometime. But the average is 24 years. It's a lot of time, and if that's the house you're going to live in, it's your last house, then you're not leaving. It's trapped. Now, here's the other problem. I have a number of friends around my age. However, the new spouse is substantially younger than maybe a previous spouse or them. But the bottom line is, when they die in 24 years or less, maybe, right, they still have the young spouse. Case in point, I had a friend pass away. His wife was like 16 years younger than him, right? And they have a small child. Well, in that case, if you own a house and your spouse is still in their 30s and they have a 2.5% interest rate, they're not leaving the house. So just because somebody dies doesn't mean anybody's leaving. So here's the issue. People were happy to sell the house to buy the next house when you extinguished a higher rate for lower rate. That whole dynamic is gone. There's only two things that matter now for housing: the number of new homes that are built by home builders, and then household formations. And the problem is if you have household formations minus deaths at a greater number than the homes built, which right now there is. Last year we had 4 million babies born. We had 2 million households form. We had like 2.5 million people die, and we have immigration, which we don't know. It could have been 1 million, it could have been 5 million, right? But bottom line is, way more people came than 600,000 houses that were built by new home builders. So even if the thing becomes unstuck, and I say, I'm going to take my house and sell it and move to a different house, it's a net zero, because if I sell my house and buy another house, I'm not adding a new house to inventory. I'm taking another house when I do that. So if 5 million people all decide to sell, those 5 million people are going to buy one of the other 5 million houses on the market. So there's not any net new homes. I think that's a problem. I think this is, I don't think any of the crash bros considered the historical way people extinguish mortgages by buying a new house and getting a lower rate to now where everybody has a low. Literally 42% of people have their owner home free and clear. And then you have all but 3% of the people have like under 5% mortgages. And you only have the 3% of the people really are the people who bought in the last 2 years. But we could see, Oana, in 2 years, because we have the data in the article we'll get to in a second. But what happens in a couple of years if rates get down to 5 and all these 6.5%, 7% people refi to 5?
Right, they're going to be part of the stuck population, right? Yeah. So that's going to be part of it. The other thing to kind of keep in mind, like anecdotally speaking, we have a friend who we helped him actually buy a house here in Vegas, and he and his wife lived very happily here in Vegas in their home. And then there was an inheritance. They inherited a parent who passed away. They inherited this lovely, beautiful luxury home in another state. And guess what they did? They relocated to that other state, but did they get rid of the Vegas house? Nope. So now they had a parent who passed away, and that house is being occupied by them. We have their house that they're not occupying, but they're not getting rid of it either.
Yeah.
So this kind of illustrates the point that we've been making. So it's not just numbers out there for us. We're seeing this live with people that we know. Now, does everybody do this? Of course not. But enough people are doing this that it lets you know that even death does not bring a property on the market. So just something to keep in mind. I mean, I can give you a whole bunch of stories like that from people that we know either as friends or as clients or both. Yeah. And this is what we're seeing. We're not seeing people liquidate. I deal a lot with people who are dead. I like dead people. That's another story.
Do you see dead people?
I don't see dead people, but I like dead people because dead people don't complain, and they also don't interrupt me. But I don't see the properties of people who have passed away being liquidated. I see them being put to work either for the heirs to live in or for the heirs to rent out as a source of income.
Here's the next quote for the article. This was about The Economist from Bank of America. Mm-hmm. The news it delivered was uniformly grim for home buyers. Home prices will stay high and go even higher, it said, while inventory will remain scarce. It doesn't expect mortgage rates to fall much either. Even if the Federal Reserve finally delivers long-delayed interest rate cuts, although it should be noted mortgage rates have declined for 4 consecutive weeks, inching down to 6.86 from 6.87 a week ago. The Fed hasn't changed mortgage rates now in almost 2 years. The federal funds rate's been the same, 5.25. And mortgage rates have actually, at one point they hit 7.5. They're back. So mortgage rates are moving around regardless of what the federal funds rate does, right? But
remember, mortgage rates are a leading indicator, right? So that means that they anticipate. They're not necessarily reacting to something, but they're anticipating a movement. So to that point, whether the Federal Reserve takes down interest rates in August or in September, which my money says that's going to happen one of those 2 months. I can't imagine they're going to wait until October. I think it's going to be August or September.
So for what?
For an interest rate reduction.
It has. They don't meet in August. They're on vacation, okay. I think.
All right.
Yeah, well, I think that September's the next time they meet.
Fine. The point is that it's going to happen in the next couple of months.
Yeah.
So with the next couple of months, I think it'll happen, but it's not going to be, a whole point. Okay, it's not going to be enough to make everybody go, wow. It's going to be like, a timid quarter point, right? Because they need to kind of test the waters, right? They need to put their toe in there and see, okay, well, what happens if we do a quarter point? What does the market do? And so they're going to do that. And the market will probably react positively, but not enough to make it so absolutely desirable for people who were on the fence to go, oh, yeah, this is it. The people who were already buying, they'll still be buying. Everybody else is going to go, well, maybe I should start looking because by the time I find the house I want, then interest rates will be at a more reasonable level. So I think that's what you're going to see.
Okay, here's another quote for the article. This is the home price prediction one. Home prices are predicted to decline by 4.5% this year and then by another 5% 2025 before dropping by 0.5% 2026. According to Bank of America, it also warns the lock-in effect in which homeowners stay put because they're locked into cheaper rates could persist for 6 to 8 years. First of all, nobody knows what is going to happen in the housing market.
I do. I'm kidding.
Okay. But I predict this. If home prices drop 0.5%, the Crash Bros will all come out and say, we called it. We called back in 2019 when we said the housing market would crash. And they look forward to 2026 that home prices fell 0.5%. Now you should buy a house because yes, home prices are 80% higher, but they just dropped 0.5%. And now it's a good time to buy because you always buy when they're down, not when, Anyway, I don't know where they came up with these numbers. To me, this is a bit ridiculous. Guessing 4.5% to 5% is literally what home price. If you average home prices, that's what they do every year. They go up 4.5%, 5%.
Right.
But I don't know what they're trying to. Obviously, there's a good chance Fannie Mae thinks that rates could be down in the low 5s by the end of 2025. So, and if that's the case, the amount of demand to purchase homes is going to skyrocket. It's going to be crazy. It'll be a great time for real estate agents. Right. Real estate agents, remember, do not make money if home prices go up. Real estate agents make money when there's high numbers of transactions.
Right.
And that also happens when prices are falling. Generally, there tends to be a lot of transactions happen.
Right. So to that end, some of you may have heard about the settlement between the National Association of Realtors and the Department of Justice. Mm-hmm. And you may have seen lots of panicked agents out there who are talking about buyer-broker agreements and things that maybe you haven't had to sign before as a buyer. If that's something that interests you, put that down in the comments and maybe we can talk somebody into helping me do a video like that, because that's something I've been working on with my agents. And I think it's worth discussing with you guys. If it doesn't interest you, that's totally fine. We won't do the video. But if it does, put that down in the comments and encourage somebody to do that video with me.
I have a number of videos on buyer-broker agreements that I made over a decade ago, mm-hmm. but they're oriented toward real estate agents and how a real estate agent will go about getting somebody to sign a buyer-broker agreement. Back when I was we were selling like 600 houses a year.
Right, but I'm interested in doing a video about buyer-broker agreements and how that impacts buyers and sellers.
I think we should do it for sure. Anyway, Oana, final thoughts on Bank of America's dire predictions. Nothing really in this is groundbreaking. They're just echoing kind of stuff everyone's been talking about. But funny enough, nobody in the industry, in the mortgage industry, real estate industry, are actually predicting any sort of housing crash. They're all predicting this continued exactly what's been happening.
Right. So ordinarily, I would say, well, when everybody's going in one direction, go in the other. But in this case, I don't think that they're wrong. I think that the fundamentals are there. We have low inventory. We've had low inventory. We have insufficient building. We have more demand. We have growing population. So for all those reasons, I think that real estate values will continue to, depending on the market, stay the same or appreciate for the short term. And the long-term trend, obviously, when you take out all the bumps along the way, is that real estate appreciates over time.
Yeah. I don't think it's going to change. No, we haven't sold our rentals. None of our investors are selling their rentals. If you want to sell your rental or your house in Las Vegas, I will put our information in the description. Mm-hmm. You can go in the description. You can email us or call us or text us and say, come over and help me sell my house, and we'll take care of everything for you. You don't have to do anything.
We would love to do that. And besides that, we love meeting you guys out there. So if you see us out in the wild, at the grocery store, in a restaurant, wherever, remember, we don't know what you look like, but you know what we look like. So please stop by, say hello, and give us some encouragement to keep doing the videos, as well as suggestions for video topics. We appreciate you watching. Remember to like the video, subscribe, hit the notification bell, share the video, leave us love notes, and we'll see you on the next video. Bye.
Bye.